Yeah, so it's like it's it's weird how the evolution of it is, but apparently it's the 12 moving average or exponential moving average divided by the 26 exponential moving average, and then they use that with the 12. It's like the 12 minus the 26 divided by the 12 EMA, and then once you get all of that, that's how you get the two cross or the two moving averages that that cross over.
Okay, got you.
But there's like some weird, well, I wouldn't even say weird, but one of the shortfalls of it is you can't track high momentum moves either to the upside or to the downside.
Mm,
Like there's an example that it showed on the Spy, I think it was, where one day it crossed over, or it should have crossed over, and it started going to the upside, and it was very high momentum, but the
right.
Max D didn't catch the initial move until like a week or 2 weeks later. So at that point, it was already near its peak for like that time frame, and you would have missed out completely if you only relied on the MACD at that time.
Yeah, that's the thing about technical indicators, right? If you rely on one thing, you miss out on the others.
Yeah.
You got to be really careful.
So that's pretty cool to just go around and mess around with, and or at least to read about. But
Yeah, I'll check it out. Looks interesting. I'm looking through it right now. So
so, how has how's been trying to nail down this strategy going for you?
actually, I've made a lot of progress this week. Last week, especially with the strategy outline, I kind of tightened it up a little bit. It was all over the place, but I spent a lot of time just trying to figure out how to use the risk profile and probability analysis on Thinkorswim platform. Just to get an idea of how I'm structuring my trade and not to lock myself in a bad trade. Um, so I've been going back through some of the videos Eric had done on the lead diagonals. I think that he had a whole bunch of HUT trade adjustments that he had, trade management. So it was like 6 or 7 videos of them. So
Mm-hmm.
just trying to get an idea of how to, if it goes against you, how to manage and how he manages it. So capturing all of that, but it's been good. I tightened it up a little bit. Um, let's see. Maybe I can share screen here. Unless you want to go first, and then I'll go later.
Oh yeah, go for it, man.
Let's see. So my strategy outline is pretty tightened up. There's still some work need to do up here in the setup part, and but rest of it looks good. I'm happy with that. Uh, I need to add a few more details here. So trade structure, long calls, definitely greater than zero point 0.8 delta, days to expiration, and size depends on how I'm going to structure it. And short calls, 20 to 50 delta, closer DTE, preferably at the money or in the money strike. And you want to allow yourself to scale into it later on. So just to leave some additional room in there. And delta management, we went through this obviously a while ago. So delta, you had some trouble with the delta ratio, so we can go over it. I think I've got a good handle on it now. So
Cool.
um, delta ratio will inform me how many short calls I can sell, and then the adjusted cost basis and critical strike will obviously help out. And I wrote a bunch of but a little bit of note on how to use the probability analysis and the risk profile tool in Thinkorswim, just so I. Next
Oh
thing is,
yeah, that's a good note.
yeah. because I kept going back here and I kept doing this and then I would forget, hey, how do I do this again? Go back in there. So just started writing notes about at least what to watch out for, or reading through making notes off of Eric's videos. Um, so that'll help me there. And then I know we went through this like a couple of weeks ago, but I tightened it up a little bit more. Scenario A is trade management, just like profit taking, or even if it's lost, then how do you go about adjusting it, and how to unwind if I'm taking profits. First, I have to exit out of the long calls, and then use the proceeds from that to cover the short position, and then come back to liquidating all the other long calls. Um, then if there's short calls are in the money, I'm still debating if I should roll them or close them out for um, loss because this would have appreciated. So I'm still working on that. There's a little bit of work I need to do. If it trades sideways and there's not much in, if the stock is trading sideways and not much movement, and what what do I call it? Targets, profit targets I'm going to use to take out the short call premium so I just don't leave the trade open. Um, Obviously, you want the trade to let it work out, so that's if it's trading sideways. And scenario C is if it drops, what do I do? I'll have to, my leaps will start losing value when it starts dropping, so I'll need to scale into it to allow myself to reduce my basis to then work off of that. So writing a few things about that. Still need to work on the profit and loss targets. Still trying to get an idea of where I should, how I should do it. Mm, But I have some idea. I just haven't put it down here yet. I made a separate section for scaling for long calls, initial long call scaling, and then every 5% move, take a look at the stock and see if I want to scale in with the long call. Um, and for short calls, if the initial the you get the most premium upfront, um, collect more premium upfront, but cap the upside. It's a balancing act. So obviously you need to figure out where to um, sell your short call at. So again, going back to the risk profile. So I've been working on this Kroger trade, a diagonal I think Kroger has earnings coming up on the 16th. That's like 13 days from now, 15 days from now. So might not be the best time to enter it, but who cares? It's in a paper trading account. So I'll, uh, uh, I'll fight it if I have to. At least I'll learn something along the way, right? Um,
Exactly. That's great.
so yeah, so the trade looks good, even if I sell it at 1-to-1 ratio and not like right here. I've been testing out different leaps, whether I should go with the 28th Jan or 19th Jan, different deltas in the leaps. Oh, deltas are over here, 81, 86 delta, 70 delta. This didn't really work out for me, so I decided I'll go with the higher delta. I think at the end, where is so I'm going for 28 Jan, 23, 82 delta. Cost me about 1400, I'd say, between that, somewhere in there. The open interest is good, liquidity is good in this strike, so decided to go with that. Um, then the short call is somewhere up here. This is a this the volatility is so high in this because of the earnings coming up in that month, and then it just drops off completely in the further weeks. So I'm looking at trying to capture the volatility here and get some money up here. So sell a little bit more out of the money at 35 delta, but there's still enough premium in there to, you know, help me collect some money up front. So when I do that, if you sell it at 1-to-1 ratio, my looks like my max profit at the expiration. So this is where I had confusion. Right? This we can tell easily where your max profit is going to be. You just slide the thing over there, and it looks like it'll be around here, $313 at short strike, $55 expiration. But if you change the ratio, then how do I like? it keeps going up.
Yeah.
So I had some trouble trying to, that was my question with Eric, but I guess he was busy yesterday. We'll probably ask him. So, well, this looks familiar. Looks absolutely
Yeah.
exactly like how even the colors. But I'm just glad I got it to work. I have everything, almost everything I need here that is working. So it was really helpful building it by myself, even though I was straight up copying from.
Yeah.
But it helped. So my expectancy is coming up to be 1.3 if I just do it at 1-to-1 ratio. But it'll go slightly higher up if I do it at 2-to-1 ratio. That's if I buy two leaps and then sell one call against it. But yeah, well, we built this theoretical pricing calculator, so the leaps are showing up as 20. I think I had to update this. It's pretty old. I was doing this on Friday. And we built this expectancy matrix. My wife actually helped me build this yesterday.
Whoa.
If I start taking profits at 50, 60, 70, 80, versus managing it at two times loss, two times the credit received, 2.5 times, three and 3.5 times. So it just spits out a bunch of different numbers here and scales it based on where I get the max expectancy. Obviously, if you collect, I mean, if you close the position at 80% profit with two times the loss, you get the max. But it's pretty obvious. I don't know if it's going to make much difference, this table, but at least to visualize and get a good idea of if I do take it out at 60% profit and manage it at three times loss, I should have an expectancy of 18.76 with the expectancy ratio of 1.25. So something like that. Just working on it a little bit. Put some time
That's
into it yesterday. But
that's
yeah,
insanely cool. Is that now is the expectancy matrix the same thing as the expectancy calculator?
yes, it's the
Okay.
same thing. Each of these cells does the same thing that it does here.
And the expectancy matrix is more like forecasting, right?
Correct, correct.
Okay.
All of
Wow,
this
dude.
is just forecasting, yes.
Okay, that's awesome. I've not seen something like that before, so it's blowing my mind just to see like how it all works out. That's really
Yeah,
cool.
yeah, dude. I was happy the way it came out, but look, that it's this is a perfect example, right? When this spits out -5, almost $6. So if you're managing the trade at 50% profit, but letting the trade run to 3.5 times the credit receipt, that's 3.5 times $1.20. Your
Mm-hmm.
expectancy is negative. It's telling you don't do that, you know?
Yeah. It's the and not even or not only is it showing you the numbers to not do that, it's very clearly showing you a color that you don't want to
Correct.
see, you know?
Yeah, exactly.
It's
Too
great.
bright red. Yeah. So yeah, this is the thing I was working on yesterday, but most of it I'm trying to figure out how to do this, and then I noticed in the I went back to Teaching to Trade episode 10, and you asked him about the leap question, and then you guys were discussing about it. So he started to build out a leap trade, and he went over here, and he was doing this thing, so I was trying to follow
Oh,
along with the video. But I think I figured it out now. So my expiration is 17 June. So I look at what's the probability of the short strike being in the money at 55. So go up like that. So it's 27%. And then I feed that back into um, my expectancy here, and then it spits out a number. So
okay.
I guess it makes sense. You just have to practice it a little bit.
Yeah. And see, I've been doing the same thing, but on the opposite end with the long calls. So I've been doing the probability analysis for the long calls. And my problem was I can't go far out enough in time because,
Oh,
you know,
that's
the
right. Yeah.
probability doesn't show that. So I would just go literally to the end of that chart and find my strike and say, okay, well, if it's, I mean, if I'm like on my case, I have, let me pull it up really quick. One of the long calls I had was for the probability of profit was 87.6%. So it's like, yeah, I
Oh,
mean, but that was not for my expiration. That was maybe a year away.
Oh, okay.
S-
Yeah, it
So it's like,
goes only like till October or something if I'm scrolling past it. Yeah.
yeah, so at a certain point, it's kind of like, well, I don't know how much or like how well this is going to work, but I can have a good idea at least.
Yeah, yeah. At least it tells you that, hey, don't be a dumbass here, right? That
Yeah,
that
right.
you use the data to make good decisions. Uh, but yeah, that's what I have for Kroger. But I'm still trying to understand some things here. He was going a little bit too fast, but I slowed the video down just to get an idea of how he's doing it. It'll be nice if we can spend more time on this eventually. Just I have to just keep practicing it.
Yeah, I get that.
Good. Cool.
Yeah, man, that's
Um,
dope. It seems like you've been working nonstop on the short call side of things, and I've been working on the long call side of things.
oh yeah. Tell me. I think I disconnected.
Oh yeah, it dropped out real quick.
Yeah. Um. So what are you working on the long call side of it?
So on my end of things, what I've been doing is so on the log side of things, I haven't added much to the trade log. Um, Let me pull it down here. Right here. So I haven't added much to the trade log itself, just because I've been working, or the trade plan, but because I've been working on the trade log. So not a lot is new with this, and I'm just kind of skimming over it. So on my end of things, what I did was I was messing around, with trying to tie all of this stuff to the actual trade log itself.
Right.
And because I want to start simulating actually having, a $5,000 account. So, right, and right now that is terrible, just because the first trade that I threw on would have thrown me way out of whack. But
Yeah, that's way over your account. Yeah.
yeah, I'm immediately like going into margin and everything on that. But what I did with this is I already had this part of the trade log just here, so I figured I might as well use it. So I've been using this for the long call side of things, and I'll go in and I'll calculate the total cost, and that's the long call debits minus the short call credits. So, I'm getting an idea of how much it'll cost me up front. And I'm doing all of this, like before the trade. So that way I
Right.
can see what I'm looking at. And then that's where I was going in, I'll calculate my profit target there. And then I was going to the risk profile and probability analysis to get my probability of profit. But I think now that I've seen what you've doing or what you're doing, it might be more helpful for me to do probability of profit for the short call instead, because I mean the long call, I don't know if that's really worth getting that information, you know?
Yeah, I think short call would make more sense. I mean, that's just my opinion because I think that's where you have to manage a lot. Long calls are so deep in the money that likely if the stock keeps moving up, you'll have higher probability there no matter what.
Yeah, and I'm finding out that I agree with that 100%, just because I've been messing around with it. So going into that, obviously my max risk is always going to be the long calls debit. So it's just calculating that over there. But I'm trying to figure out the other information that I need, like all my deltas and what kind of theta I'm looking at. But
Hmm.
it might be worth me noting to start to do this section, either section it off and do some of the long call information, and then the rest of it the short call information, or only do short call information here.
Right.
But
Wow.
what were you gonna say?
Oh no, go ahead. I was
Okay.
just looking at it. I was reading through it.
Um, so that was just me messing around with this first trade, and then I started to throw on a second trade for, like to just understand it a little bit better, because it's easy for me to throw on the trades now that I understand, throw them on at a ratio, look for the liquidity, like all the little things, but I'm still having a tough time understanding how the trade log it work or yeah, the trade log works, how the profitability works on things. And so I went ahead, and this was on XLF, and went and found, I have all the information right here. So I I placed a bought three. It would have been, yeah, three long calls on the 20 Jan 23s, and they cost me 11.25 at the time.
Mm.
And then I went all the way up to 17 June 22 for my short calls. It's down here, and they cost me at the time, it was 137, and I think I updated that. So whenever I actually placed the trade, so when I wrote all of it down, they were selling at 137. But when I placed the trade, they were selling at $1. So
Oh, okay.
I lost 37 cents for each contract, but I'm okay with that.
Wait, did
And
it drop down? Did it? It looks like you paid debit to close of 91 cents. So you made like 9 cents in profit, right?
so this is a running, like it's not, I haven't closed it out yet, but
Oh, okay.
yeah, and I don't know yet if that's how I want to do it, if I want to keep this updated like that. And it might be worth
Mm.
making a note, like, you know, haven't closed position yet. Keeping total of latest price, our most recent
Oh.
price. And that was just because, on Friday, I went and looked at what everything, like how the trades were performing. And, I can see where my short calls are at. And then it'll give me a general idea of what I'm looking at. It's, I don't know, it's more helpful to me in a
Yeah.
way.
Yeah, I get it. Yep.
So that's really what I've been doing on this side of things. And I've done a little bit of like just updates like on my watch list. I'm starting to build this out a little bit, and just having everything, in one kind of sheet is helpful for me. So having
Nice.
like my own little personal watch list, and then having the sectors that I want to watch, and just building that out from there. But
Are you pulling this from the platform or are you entering them manually?
so you can just pull it. It'll auto update with like the Google Finance
Oh,
formula.
okay. Gotcha.
Yeah, so it'll pull just the latest price and update like that. It updates like, I think every 20 minutes or so. So it's kind of behind unless you go in and force update it yourself.
Yeah, 20 minutes should be good. I don't think, unless you're like actively trading throughout the day, 20 minutes is plenty. Like,
Yeah,
should
exactly.
cover it. Yeah. So I guess my question on the trade log is in the debit to close that you have listed down there, 0.91 cents. Does
Hmm.
that feed into any other formulas on the top in the green section for your long calls or no?
I don't think it does.
So let me look at my sheet. I don't think it does in mine either. But it should account it should count for what do I call it? Adjusted lead basis. If you start closing out leads,
Hmm.
then you should be pulling something from there. No, not really. I have to look through it again because if you end up paying more money than you received credit for, that means you have to sell a lead to close out that position. That means the trade has worked in your favor, but I don't know if you have to take that uh, value and feed it into something else. I have to look through it.
Okay, yeah, because on this top trade for XLE, the for the adjusted leap basis, it's referring to this debit to close. Let me highlight it. That's not what I wanted. So for the
Mm.
adjusted leap basis, it's trying to calculate K14, which is this one right here. And I I guess I don't understand if I should put my debit to close, like the total debit to close down here for each trade, because this debit to close here would account for this top trade up here.
Right.
So, I guess I'm not sure if I should work or total it down here so that way it'll calculate up here. Because right now it's just calculating the zero.
If you do that, would that I don't know if it makes sense to split them up for each individual position, have a separate log, because if you have like multiple short calls on an individual position, then totaling them up would make sense. But if you total up debit to close for two different tickers, then I don't know if it'll have wrong calculations for
Mm-hmm.
you, I would imagine.
Yeah.
Uh, might be, yeah. I'm definitely thinking, if at least for me, I'm thinking about using different, uh, multiple different trade logs for each position, and then trying to put, like, get the overview data off of those into another sheet. Just trying to keep it clean. That way, I don't get confused on where the addition or where the money is going. Or, you know, not making much sense. I think I'm still sleepy.
No, no, I follow you though. Like you would have a log like this built out for each individual trade, and then you would have another sheet, like over here, that would reference everything else like that, each of
Yeah,
those
yeah,
logs.
because if you have both the trades on the same log and then you sum up the debit to close at the bottom like you're talking about, it will give you wrong results because
Yeah.
the first debit to close is only for the first trade, the second one is for the different trade, right?
Yeah, exactly.
And yeah,
And that was
um,
another thing I was trying to test is if you could use multiple trades in this one log, and it's been kind of a pain in the ass. So I
yeah, I
was
would imagine it's too many
yeah,
things.
yeah, so I'm kind of with you on that one that I'm going to start creating one of these for each trade, and it seems a little more time consuming, but it's more manageable in the end.
Yeah,
It's more
I agree.
efficient that way. But yeah, I that's all really that I've been doing this past week. Like I really didn't have much of anything done last week just because I got caught up in having a social life. But
Yeah, man, I get it totally.
yeah, this is where I'm at. I'm still having trouble with the maybe not the short or the delta ratio now, because if
Mhm.
I'm understanding this right, like for the short call lots that I need to sell, I can't sell 2.17, so I could sell 2.
Correct. You round down the from the delta ratio.
Okay. Yeah, okay. Cool. So then yeah, then for this trade, I'm selling 2 according to this.
Got it.
And I've just been going on a 3-to-2 ratio. Just it seemed right to me, but for if I'm going to start simulating the $5,000 account, I think a 2-to-1 ratio is going to have to be more realistic. So that's another thing that I'm going to have to mess with.
Yeah, yeah. And the plus, if you're buying two leaps, you're kind of at the max allocation already, right? At 5,000.
Yeah, I do.
Mm.
Some of them, these long calls, they get real expensive real quick. I
Yeah,
found.
man. even for a stock that's like Kroger that's trading at $50, like you have to spend at least 4,000 to just get the trade started.
Yeah, dude. It takes so much capital up front. And
Yeah.
it's like you want to sell the long calls or the short calls and, try to reduce some of that upfront cost, but even the short calls, you're going to make like a buck 30 or buck 50.
Yeah.
It's like, thanks, man. It's like 20% off now.
Yeah. Yeah, it's definitely capital intensive. I thought initially when we started this session, I was working on cash secured strangle, and I kind of left it in the middle because it got too complicated for me. I was like, okay, I followed it all the way through, and now I can't build out a good trade log for it, especially when you start adding start selling short calls on your assigned shares and then sell a put again to make it a strangle. How do I even track that? I was like, oh my God, this is quite a bit. So I gotta go back to it. But yeah, I thought that was capital intensive. This thing is a monster.
Yeah, dude. And this is supposed to be easier, you know?
Exactly.
It's like whenever I was starting out and we had to pick our two strategies to work with, I started doing the risk-free vertical that Eric was talking about. And once I started to get into the weeds with that, I was just kind of dawning on me like I'm a little in over my head on this, man. Like I don't know what I'm doing at all. This is not working for me. And I had it in my trade log and everything, or trade plan, had it all for the most part kind of worded out and a general understanding of it. And once I started doing the diagonals, I was like, okay, well, this one's makes much more sense. It seems more efficient for me. I just cut the risk-free vertical out of the trading plan altogether.
Yeah, it makes sense. You have to find the product and you have to get the pricing has to be absolutely perfect for you to have a risk-free trade, right? That's tough. You have to go searching across the whole the whole market. That's going to be really tough.
Yeah. I would be curious though if we could get somebody like Deb that was doing like the cash secured strangle.
Yeah, that'd be nice actually.
If we could get her in here to see if she's got any like trade logs built out for that, that would be really cool to get in.
Yeah, definitely. I see her on here sometimes, but she doesn't really interact much with the group, I guess. Must be busy.
Yeah, yeah, I can only assume that she is.
And something else.
So,
Yeah, that's about it.
so on your end for that expectancy matrix that you had, I know
Hmm.
I asked, but just to
No, I
ask
could.
again,
Yeah, go ahead.
it's it's the same as this expected profit calculator, right?
And expected profit calculator is, yeah, it looks like that. What's the left? What's the one on the left?
What was it?
36. Oh, sorry. Did I share my screen? Then let me exit out of that.
Oh, so
Yeah.
on this is the percent underlying move. So it's just I use these arbitrary numbers just to get it built out. But if
Okay.
the underlying were to move 36% to the downside or 36% to the upside, so I used the percent of the underlying instead of percentage of profit because
Okay.
I
Um, Go ahead.
I was just gonna say I think in this case you use percentage of profit instead of percentage of underlying.
Correct. Um, how are you calculating? What's the formula for expected profit on your sheet there?
So it'll be
So
the C18. So it'll be the probability times the profit and
premium.
loss.
Okay. How are you getting the probability? Probabilities derived from the platform?
Yeah. So I had to go in and find each like strike price and then calculate the probability or just type in the probability.
Okay. Yeah, that, that might be. This is more like expected move, I would say. Well, it does make the expected profit. Yeah. So let me show you how I'm calculating it. So
Okay.
let me show my screen. So let me know when you're in.
Yeah.
Okay. So I'm basically using the same formula here in each of these individual sets. So my win size would be my max, or okay, that it changes because all of these values change depending on where you want to manage your trade. Like if it's a 60% profit target, 80%, 90% profit target, right? So your win size will keep changing. If but this looks like I'm using the max win. So if I go back to um go back to this uh, at the short strike, what my max, if my short strikes go in the money and my long shares long leaps are going to get called away, then what's my profit? So I'm looking at 514 at 55, 508. So I put that in there, and when the probability of the stock being at 55, right? So then I go here, just like how you were doing, stock being at 55 at expiration, then I go there, look at that. That's 27.77%. So I feed that here. Then the loss I'm managing at, let's say, 3.5x. Then I look at what's 3.5x of the 3.5 times of the premium I receive, because I'm not concerned about losing anything here. If the stock is moving up, the leads are moving up in value too. I'm
Mm-hmm.
only concerned about um, if I have how much I'm going to pay back to close out this short call. If I've only collected $1.20, like three times that would be close to 348. I think here in this calculator I only used three times, so $348. So I go back in here um, on the risk profile and see on the purple line where I can have the maximum loss. That's if I scroll back down here, 348 right there. 348. There we go. So 49.98. Then I look at the probability analysis at this expiration. What's the chance that the stock is going to be at 49.98 below that? So my max loss will happen actually above that, right? Might be doing something wrong here. No, it is right.
Would you actually on this? Would you use in the money or would you use touching?
I think this is in the money.
Okay.
Right,
Uh,
right now it's in the money. It can be touching, but I'd go in the money because I'd only manage it if it starts testing my short strike really badly, right? I
okay.
don't care if it touches somewhere along the life of the trade and it falls back down.
Okay.
But I might be wrong. So it's just how I'm thinking through it. So if it's 49 point something, and then I'm looking at the probability of it being above that is 72, so below that is 27. So I think this should be 72. I might be doing something wrong here. Let's see. Let's see if it changes my expectancy. There we go. My expectancy is negative now.
Mm.
My ratios, my expectancy is basically this multiplied by this minus, okay, minus the max loss multiplied by that. It's the same formula Eric uses. The ratios is this divided by that. So each of these cells are doing that for, let's say, this cell is basically uh, I-35. That's this one here. Win amount, what would be my, if I manage it at 50% profit, what would be my max win amount? Multiplied by the win probability of this. So at 50%, I look at this. Where can I get 256? It's a bit of a entering process, but once you're done, it gives you a good. So it's 256 somewhere around there at expiration. So 53.50. The probability of that happening is you got to do the same thing back
Mm-hmm.
and forth, right? So 30, 40%, something like that. So you put that in there, and then you subtract it from this two times the max loss amount. My max loss is 348. Oh, sorry, two times the credit receipt if I'm managing it at that point, and this will spit out that so I-35 is this multiplied by I-36 minus G-38 is my um, two here. Oh, sorry, this one um, multiplied by H38. So the probability of having max loss is this. And then it just, for each of these cells, it does 50, 60, 70, 80. And then if you go down to the column, it does 2.5, 3.5. So it's the same formula for all of these, except it just manages at different levels.
Okay. And for your max profit, because I know, like on your win amount, on like if you
This one?
did a fifty
Yeah.
percent win,
Yeah.
is that's multiplied by two, right?
This,
So it's just like
uh,
two lots.
No, I'm just going based on the entire profit of the trade. So I'm not splitting it in, like if I take out the, let's say if I do edit this, how do I, that's another thing I need to ask him. How do I go about editing these things in here? I can't figure it out.
I can't figure it out either. I'll just go in and buy and sell at the same time. That's how I figured it out. Or doing a custom like you have.
Yeah, yeah,
Because
but
if
you
I try
can't,
to
like, okay.
if I try to set up a diagonal, it just locks both of them together. And if I try to sell or buy two, it's gonna sell two. And I'm just like,
Both, yeah,
okay,
both of them together, right? Yeah,
yeah,
exactly. That happened to me. But your question was this, right? What's 256, 50%? So I'm going based on the entire trade, not just the one leg of either leaps or the short call, because I think that's what makes the most sense. If I split them up in different legs, then I'm not accounting for how the deltas on the other leg is interacting with the delta on the long call. But that's very important, right? You don't want the delta to be positive. You don't want it to overwhelm the short delta and start eating into your long profit. So when I'm looking at max profit, I'm looking at the combination of both of those things. So at this, like if I'm
gotcha,
buying one, selling one, my max profit is at the short strike because that's the standard diagonal, right? When your shares get called away, when your covered calls, if your shares get called away at your short strike, that's the max profit. So, but if we sell it at a ratio and you still go back and look at the 55 strike where I'm selling the short call, your max profit is 511. So I'm basing off of that. So 50% of that would be somewhere close to 250. So
okay,
clear on that.
that makes a lot of sense now. Okay, follow you on
Yeah,
that.
if you just do the leaps, then you'll completely ignore this part. That's having a significant impact on your overall P&L too.
Okay, and then for the rest of it, the calculator, you go in and you just fill in all of those amounts to the right, and then on like the x-axis, and then you do it on the y-axis, and
Yeah,
then
so
it'll
these
just
ones in the green. Yeah.
okay.
These are auto-calculated based on the premium received here. So I'm feeding this in here, and these auto-calculates. So this is basically multiplied by two and a half times, and three and a half times.
Gotcha.
And these I have to go into the prop that this tool here, and then feed all this in and feed all that in. So basically eight things that you need to feed for it to spit out this. I do have a question here, though. Now I'm really confused. Maybe we can figure it out together because max loss is happens when the short strikes goes way in the money. So for the short strike to go in the money, the loss probability should be short strike is 55. Max loss is 348. So let's go back there. 348. The on the purple 348. 49.98. Okay. So if I'm looking at that, I have to look at the numerator, right? I should. So basically, I'm saying 73% chance that it will be above 49.66, correct?
Yes.
So is
Yes, that'll
that's
be
where my max
above.
max loss occurs?
I would say that your max loss would occur if it were to fall below that 49.96. Because if it, I mean, then again, you might be
Right.
able to look at touching to see what the chance of it touching is, because you could see what it's going to look like there.
49, yeah, 52% almost.
That it would at least touch. So,
Right.
I mean, if if I'm looking at it, I'm assuming that it's going to be on the in the money calculation, it's going to be that 29%, just because I'm I'm looking at that it has a 29% to fall below that strike, that 49.9 or 64.
49. Yeah. So, max. Oh, yeah, 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 yeah. Okay. So this is what happened. So we're doing for the entire trade. So I keep again, I went back to doing short calls. So my brain
Oh.
is thinking short calls, but this probability analysis for the entire trade, right? Yeah, that does totally make sense. So you're right. So if it falls below $49, that's when I start hitting my max loss because the leaps start decreasing in value. And but my max
Okay.
loss target is based off of the short call premium received, which is confusing in itself because there's no target for the leaps. Where do I manage the leaps if it keeps dropping in value?
Huh. I guess that's where it comes into play, where if the underlying moves 5%, you reevaluate.
Right.
I guess that's kind of the safety measure for that.
Yeah, yeah. I made a note here, but I didn't fill anything out on it. So yeah, but for the leaps, I guess you can manage it at stock dropping percentages. Yeah, I gotta make a note here. I need to go back through some of the videos and okay. Yeah, because that will give me a negative expectancy. So if I do, what was that, 49 point, something like that, 24.70, and that looks more like it. But
Yeah.
this is making more sense
It
because
looks
it doesn't.
better, first of all.
Yeah.
It's not scary.
Yeah, definitely. Because when I'm looking at the risk profile itself, and say even if I'm not selling it at a ratio, right, I don't have any upside risk at all. So this trade, what am I missing? I can't lose on this trade. I don't get it. So, or I can't lose if it starts moving down, especially because earnings are coming up and looking at how Walmart reacted, like that big drop off in Walmart
Yeah,
after earnings.
yeah.
It's a risky move to go into Kroger before earnings, but um, it's just the trend is wrong, man. You know, maybe I will wait till after the earnings till I figure out some of the questions I have. Um, but yeah, but if you look at this, no matter what, if I put 1-to-1 ratio, I'll still make close to $200 at expiration, which is just because of the deltas on the long call. If I had to choose any other trade, if I had to go in, do that, then this is how it starts behaving. There's a peak profit, and then it starts. It doesn't. It's not even profitable. It's at minus 250, I think, somewhere around there. Yeah, the max profit I can make is the loss. It's
Yeah,
crazy.
your max profit is a loss.
So I was messing around with different strikes to see how the profile looks. I think that really helped me get into perspective how the deltas are acting on each other. You really need like a high delta, and if you start selling closer to the money, like at the money, this is like almost a 50 delta strike, then you really need a higher delta to not let it eat into your upside potential here. Yeah, yeah, I've just been playing around with different strikes, trying it out.
When you do that, do you just you can't add them in on this page, can you? You just go into the trade tab and just like analyze each trade.
Yeah, you can add it in here.
Oh,
You can click on simulated trades, but I saw Eric doing that in the what's that teaching to trade video. So he just goes here and let's say he wants to sell this call. He'll just click that and then he'll go to the link and say analyze trade and he'll send it to the analyze tab here.
oh, okay. I didn't know you could do that.
So it shows up here. And then the same thing for the leap. If you want to buy something, he just wait, what the hell? What happened there? There are no leaps? Oh,
Oh, the strikes.
damn, it changed out all the profile. Keeps removing it. Okay, hopefully this should have it. Nope, still nothing. Anyway, yeah, he goes in here, selects one of these if he wants to buy that, and then links it to the analyze trade. Goes in here, start looking at it.
Okay. Oh, okay. That's good to know.
Yeah, there's so much small little details. He does it so quickly in the videos because he's so used to it. And he's like, oh shit, that was really useful. I gotta make a note of that or learn how to do that.
Yeah, it's like a minor thing to him, and we're like, dude, hold on, hold on,
Do
hold on.
it, do it again.
Yeah, do it again. Hold on. I'm not done.
Yeah. Oh shit, I lost all my Kroger trades. It's okay. I'll put it back in. Should have somewhere. Import. I saved a trade. There we go. Yeah, that's pretty much all I have, Ty.
Yeah, you definitely have way more than I do, which you you schooled me on this one because I I did not think to do an expectancy calculator like that. And then
I don't know how useful it is because it's kind of obvious if you look at it. Like, yeah, you would expect it to be profitable if you manage it at higher profit and collect less loss, right? I mean, you manage tighter loss targets and higher profit targets. But I just felt it's useful to see all these different numbers here if you're managing it at different levels, right?
yeah, well, and you can look at even the different expectancy ratios. Like if you were looking at saying, okay, well, this month maybe I can only afford to take 60% profit. What would that look like? And you can look at it and say, okay, well, I think that says 1683 on there or 3683. You could say, okay, well, I can, rely on a 3683 profit, off of this. I don't know. It might be useful. I think it's useful, like at least now, just to be
Yeah,
able to
for
see
sure.
all the numbers. But yeah, I mean, it may be less useful in the future, but
Right. And plus, this is only forecasting it, right? It's not actually calculating the based off of the data that you've already done. I have literally zero trades to in the paper
yeah, that's a good
trading
point.
account to, actually get the expectancy of the strategy itself. Right? basically using this just to forecast. So yeah, for now, because we are learning, it might be really helpful, I think. Yeah.
Yeah.
But
I
definitely do this though. Have you done this? Eric has put out a video for this. It's really useful.
I have not, and I absolutely need to. That is on my list to do today and throughout this week is to get that nailed down, and then have a more I wouldn't even say professional or functional, but a more all-in-one diagonal trade log setup.
Yeah, I need to. I saw you had like a metrics that you want to collect on the right hand side here with in blue. So I
Hmm.
need to like make something like that too, just to what the VIX was, what the delta, vega, theta, all those things, just to keep track of it, and eventually run some calculations on it at a later point.
Yeah, man, this
Yeah.
this is a good session, I'd say.
Yeah, yeah, I had a good time.
It'll be a fun week for sure. Especially, actually, I'm kind of excited now, to be honest, to see how Kroger plays out uh, up until up until their earnings. I want to know how your trade works out.
Yeah, I'm gonna put it on Monday. Just to, Eric, I was talking to Eric on Friday, and you know how he's always he has this process, right? He looks through liquidity, earnings, and then whatever correlation, everything. I'm just the whole time I'm looking at the chart, thinking, oh, the Kroger chart looks great. But he's like, I'm not gonna trade that. I said, why? Then he says the earnings are coming up. I'm like, fuck! I didn't know that. That should have
Yeah.
been the first thing to see. I
How did
didn't
I
even see
not
that.
see that?
Yeah, exactly. But I say, fuck it, I still do it. It's just paper money anyway.
Yeah, we're doing this to learn. So it's like, let's see what happens if I were to place a trade while this is happening.
Yeah,
Yeah.
I
I'm
don't know if I can be here next week. I'm traveling actually from I'm on vacation from Thursday and Friday, so the whole weekend I might be gone. But I'll still
Oh,
put the
dope.
trade on. I'll be on Discord and update you however that plays out.
Yeah, dude, for sure. Yeah, I mean that's awesome that you're going on vacation.
Yeah,
Much
need it,
deserved,
man.
I'm sure. Yeah, man.
But I can't get away from learning about this. I really need to get this thing moving fast so I can just tell fuck off to the company
Yeah.
and just do my own money, right?
Yeah, you're telling me. Yeah, I'm the same way. Like I'm trying to learn this as fast as possible because I want to start doing it because I want to start making money with it. But I don't want to I don't want to lose my own money with it, you know.
Exactly.
Hell yeah. All right, man. Yeah, I'm gonna hop out of here, and then I'm gonna get some breakfast and then try to get back to work, and then I'll uh I'll keep you updated on what I got going on, and then
Cool.
I'll hear from you.
Cool. Sounds good. Take it easy now.
See you, Shrey.
No, bye.